Straight to an expert then. Nick Parsons, Head of European Market Strategy at National Australian Bank, joins us live on the phone at the moment. Nick, so good to have you on the show. What do you make of the aftermath of Brexit that we are seeing? It's day 2 and still the markets are showing no signs of resilience or even turning around at this point.
Well, good afternoon from London. You're absolutely right. There is as yet, no sign of stability emerging in global equity markets. It's interesting also that as well as your wrap of what's happening on the day, we've also now seen the S&P 500 in the US on Friday moved into the red for the year, and today has extended those losses. So there is now no major equity index globally which is now showing year-to-date gains. So that is also an important development too. There is, as you mentioned, no sign of stability yet emerging, and there's certainly no sense in which we can see investors yet being discriminating amongst sectors and deciding that there are oversold conditions. We don't yet seem to be at that point. So the selling, it would seem, continues.
Oh yes, some important points made there, and of course gold continues to be on the higher levels as a safe haven, and that itself is a sign of the kind of nervousness that equity markets is seeing, Nick. So clearly, coming to the very important question, what will be the sign which will really show that we are out of the woods, or are we to see much more weakness going forward as well?
Well, I think we need to see some positive signs on business investment, some positive signs on capital expenditure, and some positive indications that corporate profitability is not being dented by the very real uncertainty that this UK referendum has produced. And I doubt very much that we will see any signs of those things in the near term. In fact, you would imagine that businesses are going to be postponing investment plans. They will be deferring capital expenditure, and at the moment they will be taking a very close look at their supply chains and their forward order books. And in that environment, I think we have to await some positive corporate news, some real tangible signs of an improvement in the outlook, and before we can safely begin to think about a turnaround in investor sentiment. It does seem some way off yet.
Oh yes, any timeline that you have in mind? And do you also think that in such a scenario, and you explained that very well, banks in Europe are going to be the biggest casualty as we have seen today?
Well, it's perhaps surprising the extent of the sell-off in European banking stocks. One can understand that the business models of some UK-domiciled institutions might be brought into question, but really for European banking stocks, not a vast amount has actually changed as a result of this. They can still do the same amount of business in the same jurisdictions that they were able to previously. But at the moment, as I said in my earlier comments, we're not yet at the point where investors feel they're going to be rewarded for differentiation. They're not yet sifting through the remains, looking for the positives. At the moment, it does seem to be an indiscriminate wave of selling, which is often symptomatic of big changes in investor sentiment. So the fear has got to be that this carries on. There will doubtless be bounces. There will be turning points, and in those periods we will question whether or not the bottom has been reached. But unless we see very, very sharp declines over the course of the next couple of weeks, in which case value emerges, then it's hard to see that we're going to see a durable turnaround. So I fear that we could be set for possibly as much as another 10% from current levels in global equities before we start to ask ourselves, is this the point that value has been reached? So I think it's got further to go, and it's probably got longer to go. And I think we're in for a very, very difficult start to the third quarter.
All right, extremely bearish views there coming in from Nick. Thanks so much for joining us with all your perspective. Clearly, Nick says that it is going to be a long haul process in terms of the pain that the global markets are going to see. 10% more decline is to be seen in the global equity markets is the view coming in from Nick Parsons. Let's take